Welcome back. Now let's invite the management of Muthoot Finance. The stock is a bit under pressure despite a decent set of Q4 numbers. The AUM saw a growth and they've maintained their gold loan guidance for FY26. George Alexander Muthoot, Managing Director at Muthoot Finance, is now with us on the show. Thank you very much for joining in. Well, sir, you're talking about a minimum growth of about 15% for FY26. You have also kept the option open that you will revise it higher. But, considering that you achieved a 40% growth last year, a minimum 15% appears to be a bit conservative. Tell us what's gone into this guidance and what could be the realistic number. Already we are halfway through Q1.
Thank you. Thank you and good morning. Over the last, maybe to my remembrance, maybe last 10 years, we've always been giving the guidance of 15% only. But always we have been achieving 20, 25, 30, and last year 40%. So it is just a number that we give in the beginning of the year. Probably we will revisit it. We will look at it probably after Q2. We will revisit the guidance number also. But the market is good. The business is good. We see good growth coming in this year also.
Are you worried that a lot of your AUM growth is driven by the rise in gold prices? If gold prices retreat, and we've already seen gold prices come down, cool off a bit, is there a risk to your AUM growth? On the AUM front, how are you seeing this volatility surge, then risk of a cool off in gold prices? And what could your AUM guidance be?
Yeah, there are always fluctuations in gold prices. Maybe goes up, goes down. But over the last years, it has always been going up only. But of course, in the last 6 to 7 months, it has gone up too high. Probably it may cool down a bit. But of course, we give only 75% of the current value. And that also is a 30-day moving average. So today, if you look, our gold loans advance which are given, it's only 62% of today's price. If you look at the value of the gold we have with us and today's gold price, it's only 62%. So that is the margin or the headroom we have. So some corrections in the gold loan will not be affecting us. Second, as always, we have seen so many such cycles. We have seen the cycle of gold price fall in 2013, 14, and occasionally over several years, you see some months of gold price fall, etc. But people don't abandon their gold. So gold price is not a big factor. But having said that, why the business is going up is mainly because of the demand for funding. The unsecured loan sector is the people are not getting the money they required. So people are using gold loan and banks are also doing it. The pie is increasing. More and more people are actually looking to gold loan for a quick and easy finance. That is why business is growing. Of course, gold prices help because they don't need to bring extra gold. With the same gold, they can get more and more money.
Okay, so as of today, as on today's prices, you're maintaining about a 62% LTV, right? So we got that.
So I think not the exact number, maybe 60,
around that.
What we have given. Yeah.
Around 60%. So give us a sense. I mean, the fourth quarter, obviously, it looked absolutely. It was an outlier, 40% growth in AUM because of the way, gold prices move. But steady state, what is the AUM growth in the loan book that you're expecting on the gold business this year, FY26?
That's what I have been saying. We will get good business, but don't be carried away or don't be concerned with the ultra conservative guidance which you are giving. We have 5,000 plus 6,000 branches in Muthoot. So people are there, the money is there, requirement is there, our branches are there, staff is there. This will go up only.
Okay, so you're just being conservative. You're admitting you're being conservative at 15%. All right. So just a word on cost of funds as well. How is that moving? Because I think for you, the NIM quarter on quarter, there was a little bit of a pressure that was coming in. But now there are a lot of moving parts. I mean, we are in a rate cut regime from the RBI as well. What are you expecting on cost of funds and NIMs over the next couple of quarters?
So we have been maintaining our spread. NIM should be about 11%. Spread should be in the 9.5%. I think in the last 4 or 5 quarters, our spread has always been 9.15, and we actually maintained. If the cost of funding goes up, We try to absorb it for 1 quarter or so. Afterwards, it's still going up. We increase our yield, but we maintain our spread. The same thing if the cost of fund. Today, the cost of funds is coming down a little. So it will take for a few months for it to maybe stabilize. If it is really coming down, we will reduce our yield, but maintaining our spread. So if there is an advantage in the borrowing cost, we pass it on to our customer. That is what our NIM and spread, etc., have been almost constant in the last several quarters.
You just spoke about
the cost of operations. Yes, the new
Go ahead,
guidelines.
sir. Go ahead.
Yeah, all the new guidelines, the compliance cost is also going up. But only advantage with Muthoot is that our per branch business is also going up. So in that respect, our cost of operations will stabilize. So last year, our per branch business is about 15 crores. Today, it is about 21 crores. So that will help in maybe absorbing some of the extra, compliances cost, etc.
Can it go higher than from this 21 crores? If yes, what is the kind of outlook?
Definitely, it should go up. That is why we are all here.
To what? To what level, sir? If you have a target, as you're saying, you've been ultra conservative, stock is down 5%, you're on the best business news channel and everyone is hearing, you can go ahead and up the guidance as well, sir. Do you want to do that?
So I think a branch, it was 15 crores last year, it was 21 crores this year. I'm sure we have branches with 50 crores, 60 crores, 70 crores also. So optimistically, all the branches can reach 50, 60 crores.
Okay, all right. But you want to up the guidance from 15% that you've given conservatively?
Not today, sir. Maybe after Q2.
Very quickly, you mentioned about yields. There could be some pressure there because competitive intensity could come back. PSUs, banks, they are eyeing this gold loan market share as well. And now Manappuram, that's been, not really a big competitor to you. They could pull up their socks because Bain has come in. A quick comment on competitive intensity and could yields come down from the current levels? I think it's ballpark around 18%.
I think I just mentioned that if the cost of fund is going up, we will increase our yield because these are all small loans. The 20,000, 30,000, 50,000, 1 lakh, and 0.5% increase in the yield will not maybe change the sentiment of the customer because it's a quick loan, short-term loan, 2 months, 3 months, 4 months. So in absolute terms, the interest payment is not much. So if the cost of fund is going up, we actually increase our yield. We have been maintaining our spread and net interest margin spread of about 9.5% is what we have been maintaining all the while. And we should be able to maintain that. Competition intensity is there. It is because this is a good sector. Everybody wants to enter there. But the pie is also growing. It is not that we are the only ones who are growing at the cost of somebody else. Yeah. Banks are also having 20, 30, 40% gold loan in their growth in their gold loan portfolio. So if everybody is growing, the market is increasing, sir.
Okay. All right. Good speaking to you, Mr. Muthoot. You're not taking the opportunity this time around to go ahead and increase your guidance. We'll chat soon. Maybe that's the time you'll go ahead and up it. Appreciate you joining in. Let's